Since 2009, stocks in the tech industry have been flying high. The money has been flowing in and the valuation continues to grow. But more recently, the wind has been taken out of its sails. The enthusiasm has waned. But what will turn this into a record-breaking boom again? You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market in the US. I want to touch on China as well. I've got a lot to cover. Let's begin by taking a look at the Dow Jones right now. It has been trading all over the place today. It seemed like it was declining quite a bit here, and this has been putting it into the negative territory, but as I record this video, it has climbed up somewhat. Now, it wouldn't surprise me to see the plunge protection team try to bring this into positive territory for the day because they want to end off the week on a positive note so that next week doesn't continue that trend. So I'm going to see where it goes. Of course, I will have that progress for you. I'll show you the updates as they go on. But this really shows us what has happened throughout these last few trading sessions. A real serious decline in just a few days, in fact. So we're looking at that. What I think could turn this around is something very simple, and that is share buybacks. All right? Share buybacks are incredibly important, particularly in this time frame. October tends to be a very bad month, and this would be the optimal time to utilize these share buybacks. So we are expecting to see over $1 trillion worth in 2018 alone, so that would be far breaking a record, and based on what I read, it would be twice the number of the share buybacks in 2017. So that shows us here that a massive amount of money is going to be coming in to these stocks. I mean, we're looking at tech stocks that have been just seeing so much inflow, whether it's from the share buybacks, the central banks, and so on. We could see that they're encouraging all of this to continue on. So I don't know what's going to happen, but I'm just really managing it as I see it occurring. I bring it to you, collect the data. That's it. Let's get on to this next chart. The greatest tech outflows since February, and you're looking at this. They've already highlighted it in the circle here, looking at where we have gone in really just a few trading sessions. It has come down quite a bit, leading us back into the levels we saw at the beginning of the year, and this has occurred a couple times since. We've seen some major outflows, but that really hasn't been the case all throughout 2017. There was not much of that going on at all. The stocks were pretty much rising continuously. There was no blip in the system whatsoever. In fact, 13 months in a row of positive stock market. I think that was a record, if I'm not mistaken, but regardless, we saw 13 months in a row into the positive territory. So every single month after month after month, the stock market was higher than it was the previous month. So that is unbelievable to not see any pullback in there. It's just crazy. But anyway, this is what we saw. And as I said, share buybacks would definitely be welcomed for any of these stocks. Wednesday was the 25th largest one-day VIX spike. Now, that isn't record-breaking by any means. However, it is quite significant. So you could see right here, February was the actual most ever. And that shows us what could happen in short order because everybody was shorting the VIX. So the VIX was basically trading like this in a very, very slow and steady decline here. Then suddenly it spiked up in a hockey stick format straight up to the sky, and you saw that truly becoming, a real catalyst to a potential crash, something as simple as the VIX. So that is, unfortunately, for a lot of individuals, going to become a big problem when something so small, so fragile, could in fact cause the next crash. I mean, think about it. It's truly worrisome, truly. So what is that stock? Well, Tencent. That's right. This is a Chinese tech stock that actually declined this year in 2018, $252 billion. Now, you might not know who this company is. It's a massive Chinese internet company that is part of the, you hear about the FANG stocks, right? Whether you want to put two A's or not. I kind of write it FANG Plus. That's kind of how I say it. I say FANG Plus. But it's really FANG plus BAT. And the BAT stocks include Tencent. That's the T. So these are the real biggest winners over the last few years. However, Thursday alone, this stock drops 6.8%. It has declined $252 billion. I mean, we're talking about excessive losses. And it doesn't matter which market you look in, $250 billion is huge. And this has just continued. It's unbelievable because there's a lot of money riding on this. And if the T gets a cold, maybe the A will get a cold, maybe the B, and then maybe into the FANG stock. So we'll see what happens here. I mean, you never know, obviously, but I'm just tracking the progress, bringing it to you, all right? The stock, one of the most widely held in emerging markets, has tumbled for an unprecedented 10 straight sessions as investors around the world debate whether the best days are over for the tech-led boom in global equities. Tencent has emerged as a key market bellwether. The company's more than 67,000% return from its 2004 IPO through January trounced that of every other large cap stock worldwide. 67,000% return since 2004. It is massive. It is absolutely massive. But to see it dropping $250 billion, I mean, we're talking about a significant decline, and I need to stress that very much. I mean, look at this. Hefty wipeout. Tencent has raised more than $250 billion in market cap. It was the world's 5th largest company at the beginning of this year. 5th largest company in the entire world. And now it's the 11th largest. Now, let's be very clear. It's still a very big company, okay? So that, shows us it was almost $600 billion. $600 billion, and now it's over $300 billion, just over $300 billion. So it has dropped levels that are just completely unprecedented, and we need to worry about big stocks like this losing so much because it could drag everything down with it. All right, now Tencent Music Entertainment Group is postponing its IPO until at least November because of the sell-off in global markets. So this was going to IPO, and then they said, you know what, we're going to IPO and it's just going to tank. So let's not do so. Let's just wait. And a lot of this wait and see attitude has been persistent in real estate, and here it shows us even in the IPO market as well. I think Snapchat should have probably waited on that IPO, but anyway, that's just what we see today. And this has, they're getting into more details about this. I don't want to cover that, but I just wanted to show you really what is going on in the tech industry at this time when it's supposed to be, with all of this business that you've been seeing, it's supposed to be, impenetrable and invincible, but it's not. This here was an article about Jamie Dimon. Did I pronounce that wrong? Dimon? He was talking about rising interest rates. If rates go up because you have inflation, that is not a plus. That is a bad thing. So far, we still have a strong economy in spite of this increasing overseas geopolitical issues bursting all over the place. He had a lot to say here. I just wanted to show you that even Mr. Dimon has decided to actually stick his nose in here and make a few comments about the geopolitical issues that are being presented to us. Now, looking at China, there was a big sell-off that occurred throughout their treasury holdings, by the way. Their 2016 into 2017, they basically made up for it. And if you look at the line, which is drawn here on this chart, it seems like for whatever reason that was done at that time, but they were continuing on with their trend of slow and steady reduction and sale of U.S. treasuries. That's what I'm seeing here. They are at this level of 1171, basically just over $1 trillion. I don't know why, but on all of the videos I do about this, somehow it always comes up that I've made up these numbers, or that the chart is false, or that there's always a strange comment about this. Just go to a search engine and type in major foreign holders of treasury securities. The very first link that comes up is probably going to be this one. It brings you right into here, and you could see that this is the latest information that we have, September 18th, 2018, but it shows us July's numbers, okay? But I just want to stress that that's the latest report, and I'll bring you, of course, in a few days, hopefully I can get the new numbers. But for the time being, this is what we have. China is the largest major foreign holder, and that is essentially just over $1 trillion, 1.1, and Japan is just behind them. And that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then, these two books have it all. You're going to be able to get everything you need from A to Z. There's so much information that is covered within these two very, very simple books. All right, so check them out. There's a link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.